Investing in an initial public offering can be an exciting opportunity to own a piece of a newly public company. To buy an IPO through Fidelity, the first step is to ensure you have an eligible brokerage account. If you do not have one, you will need to set up an account with Fidelity and complete the necessary documentation. Once your account is established and funded, you will gain access to the IPO offerings available to you. Next, it is important to research the specific IPO you are interested in. You can find information about upcoming IPOs on Fidelity's website, including details about the company, its financials, and any analyst ratings. Understanding these aspects will help you make an informed decision about whether to invest in the IPO. Remember, investing in IPOs carries risks. Also, it's essential to weigh the potential rewards against those risks. When you have chosen an IPO to invest in, you will need to place an order during the designated offer period. Fidelity typically provides instructions on how to submit your order for the IPO shares. Make sure you specify the number of shares you want to purchase and any price limits if applicable. Keep in mind that orders may be subject to allocation, which means you might not receive the full number of shares you requested. Finally, after the IPO date, you will see the shares reflected in your brokerage account. From there, you can decide to hold or sell your shares based on your investment strategy. Be sure to keep up with market changes and company performance, as these factors will influence your investment over time.